The 2008 financial crisis wasn't just a market collapse, it was a collapse of perception. Major institutions believed risk was controlled. The models looked sophisticated, the profits looked endless, so the danger disappeared from view. The system grew more leveraged, more interconnected, more fragile, yet confidence kept rising. The failure was not intelligence, it was structural blindness rewarded by short-term success. The system became addicted to immediate reward. High returns made long-term stability feel irrelevant. Warning signs existed, smart people saw them, but profits were more persuasive. Institutions mistook complexity for safety, consensus for truth. Everyone agreed the risk was manageable. That agreement became part of the danger. The system framed leverage as controlled growth. In reality, it was accumulating fragility beneath apparent stability. The system became too profitable to question. This is where most people freeze. But at Solver's Studio, we go to our toolkit, the Solver's 6. The tool here is reframing, perception. Perception defines the boundaries of a problem. Reframing changes those boundaries. In 2008, institutions focused on individual assets and local risk. They failed to see the larger system underneath them. Reframing shifts attention from isolated success to systemic exposure. Confidence gets replaced with structural clarity. The first step is reframing the object itself. Institutions saw these instruments as assets. The reframe changes asset into exposure. Now the question changes completely. Not how much does this return, but what system does this depend on to survive? That shift creates distance from immediate reward. The vulnerability becomes visible. Next, reframe the timeline. The system optimized for quarterly profit. Reframing stretches the horizon. Profit becomes fragility. Today's gain is measured against tomorrow's collapse. This interrupts the addiction to immediate reward and forces a harder question. What is the long-term cost of this short-term success? Finally, reframe success itself. The old metric was growth. The new metric becomes stability under stress. A system is not strong because it expands quickly. It is strong because it survives pressure. Decision-making changes completely. Teams stop rewarding complexity for its own sake. They start searching for hidden failure points early. The 2008 collapse was a perception failure. Reframing corrects it. Shift from asset to exposure, from profit to fragility, from growth to stability. The framework creates distance from destructive incentives and restores structural clarity. The same pattern appears in personal investing. An investor sees rapid returns from a speculative asset. The upside becomes emotionally dominant. The volatility disappears. Reframing changes the perception. Opportunity becomes volatility. Immediate gain becomes permanent risk. The goal is not fear, it is accurate perception. Every return carries structural exposure. Disciplined investors force themselves to see both at once. The crisis revealed something dangerous. Systems often reward the behaviors that eventually destroy them. That is why perception must be maintained actively, not assumed. The goal is not maximum short-term return, it is long-term structural clarity. Always question the frame that makes risk appear safe, because the most dangerous systems often feel the most stable.